We all use private companies, limited companies. We're talking about the joint stockholder company, and nothing has changed in essence. And the whole way companies are formed and funded and governed remains hopelessly stuck in sort of analog process. We've seen huge advances in a science called cryptography. We are now, for the first time, in a position to substitute a lot of the analog stuff we've been doing, like the wet signatures, with cryptographically secured signatures, irreversible processes, totally secure processes, protocols. We're trying to move away from this Dickensian sort of analog legal world, which used to document everything, to bringing everything on a digital secure layer. The key friction point is in the issuance and the management of shares. It's difficult when you have a private investment vehicle, right, to keep track of who owns shares in that vehicle if they start redeeming and subscribing. The issuance is very complex. Let's say that today we had a real estate investment vehicle with hundreds of shareholders, and then you want to do a capital increase. You basically have to send now telephone book size subscription documents to those 100 investors around the world, wherever they're based. In short, there's massive friction in how companies are formed, funded, and governed. It's kind of a new vehicle to make sure that capital and labor can be pooled together and make things happen. It allows for a decentralized ledger of keeping track of who owns shares in our case. It could also be a ledger to keep track of who owns digital currency or claims on gold, but in our case it's basically who owns shares in a private company. You use blockchain as a ledger, a transparent ledger of who is the ultimate beneficial owners of shares in private companies. The second use case is your rails for transfer are peer-to-peer thanks to blockchain. By virtue of that technology, what you actually see is that you have the ideal technology, the enabling technology, to pool dispersed investors cross-border from all over the world into a vehicle, a legal container, if you want, where they can put in money, so their investment or labor, and make something happen. That is where blockchain enables something which previously, in a sort of a central server environment, was very, very difficult to achieve. Briefly on smart contracts, you can go a step further by using the capacity of each of the shares being programmable. So they become software. So let me give you 3 very brief examples of that. One is voting, a capital increase, for instance, right? It's a major vote for the shareholders when they're going to increase the capital of a company because they will all dilute, right? So in the old world, voting on a resolution was a horribly complicated, long-winded process. Here, people get a notification in the dashboard. You know at any moment in time who owns how many shares. There is that one man, one vote, one share, one vote principle in companies. So you can immediately have a majority, a quorum online established and get the resolution passed on a capital increase. You can program shares, for instance, to send dividends out. So once the board has agreed what is the level of the dividend, it can be, with one press of the button, it can be sent out. In the startup context, you can basically put employee share option schemes and have the vesting totally automated with one press of the button is done. Compare this with how cumbersome this is with, thick documented employee share option agreements. What I think blockchain is offering here is a totally accessible, transparent ledger for ownership of private company shares. And so the whole discussion of what we've seen in the context of the Panama Papers that recently came out, right, where we've seen a massive amount of incorporations happening through a Panama law firm, which is only the 4th biggest, by the way, and that law firm essentially acted as a channel for incorporations in mainly British Virgin Islands, where the ultimate beneficial owners of the shares were actually hidden from the public view and were not accessible. That opens the door for the use of these companies for illicit purposes. Blockchain is a total disinfectant because at every moment, by virtue of the technology, you will know who is the owner of a share in a private company. So we can set up a company and we will link our identities. We will KYC, know your customer, the first shareholders, and all of the subsequent shareholders in that company. It's kind of interesting. A lot of governments now start saying we should have a central register of ownership of shares in private companies in British Virgin Islands or Panama or Cayman or some of these low tax jurisdictions. And I think people accept that sovereign states can have set their own tax rates, but what they don't accept is that you won't know who is actually the owner of the shares. Blockchain is the solution. I don't think that the central server approach is the solution here. Blockchain is the solution for that.